Hello everyone, this is Tushita Gupta, ACCA affiliate. Welcome to the YouTube channel of BeingACCA. Today we are going to be solving the question named as Duff Company. It is quite an old question, but it has been adapted to meet your latest exam standards. Duff Company manufactures three products X, Y, and Z and uses cost plus pricing. Each product uses the same materials and the same type of direct labor but in different quantities. For many years, the company has been using full absorption costing and absorbing overheads on the basis of direct labor hours, budgeted production and sales volumes for X, Y, and Z for the next year are these units respectively. The budgeted direct costs of the three products are these. Okay. We have direct material, labor, batch size, number of purchase orders, machine hours. In the next year, Duff Company also expects to incur direct production costs of these many. Overhead absorption rate has already been calculated according to the direct labor hours, according to the traditional method, right? And these are the details of the indirect production costs. Going to the first question, what is the full production cost per unit of product Z? It is very important in these type of MCQs to be sure of what exactly has been asked. For product Z, we need to find out the per unit cost, and we need to use the method of absorption costing, right? Coming on to see the costs that are there, we see that we have for product Z, we have direct materials of 28, we have direct labor of 24, and it takes 1.4 machine hours per unit. Okay, right. So we are actually, absorbing these overheads using direct labor hour. And labor hour, as we can see, labor is $12 per hour, and this is 24. This means that 24 divided by 12 is 2. So this means that product Z takes two labor hours to complete. Okay, so when we have to find out the total full production cost for product Z, we have our direct materials over here at 28. So we will add 28 plus we have our direct labor at 24, and then finally my overhead absorption rate is 9.7 per direct labor hour. So this gives me 9.7 multiplied by 2, and if I calculate it on a calculator, 9.7 multiplied by 2 is 19.4 plus 28 plus 24 gives me 71.4 per unit, which gives my answer as A. Moving on to the second one. What is the overhead cost per unit for product X using activity-based costing? Now, first of all, we will have to take all these indirect production costs, and then we will have to, separate them according to what are the cost drivers, because you in activity-based costing, we have to allocate the costs on the basis of cost drivers, right? So, coming to machine setup cost first, we have this much of the total machine setup cost, and the cost driver is the number of batches. So it is given that we have 20,000 of X, 16,000 of Y, and 22,000 for Z. And we also have the batch size. So the first thing that we will have to do over here is to find out the number of batches, because that is our cost driver for the first cost. So number of batches. Please excuse me for my bad handwriting. X, Y, and Z. And so for X, we have 20,000 units, and this will be divided by the batch size of 500 to find out how many batches we will have to run for X. 20,000 divided by 500, I get my answer as 40. Then I will do the same for Y and Z. 16,000 divided by 800 will give me 20. And then 22,000 divided by 400 will give me 55. Right, so this is 55 right over here. Now I can see that my total number of batches will be 55 plus 20 plus 40. This is 115. 115 is the total number of batches. I am spending a total of 280,000 on machine setup costs. So 280,000, I need to find out specifically for X, right? So for X we have done 40 setups. So 280,000 multiplied by 40 multiplied by 40 and divided by 115 is what I'm going to do to find out my machine setup cost for this product X. So this comes out to be 97391.30. Similarly, for material ordering, there are 316,000 purchase orders, and these are the number of purchase orders per batch, uh, right over here, right? So, for one batch, there are 4 purchase orders. So, we had calculated the number of batches. So, this is 40 multiplied by 4. These are purchase orders. 40 multiplied by 4 is 160. Similarly, 20 batches, 5 orders each. 20 multiplied by 5 is 100. Again, 4 multiplied by 55 is 220. So I'm going to add these 220, 100 plus 160. This gives us 480. Now we are going to allocate the cost that was spent on purchase orders. This is 316,000 and I'm going to take 160 and divide this by 480. So this is 316,000 multiplied by 160 divided by 480. So this gives me 105,333.33, right? Um, then coming over to the machine running costs and general facility costs, we can add them together because the cost driver is the same for both of them, which is number of machine hours. So machine hours are given in per unit forms. So let me put machine hours over here. Machine hours. So this is 1.5 per unit and we are producing 20,000 units. So 1.5 into 20,000 will give us 30,000. Let me write that over here, 30,000. Similarly, this is 1.25 for Y and we are producing 16,000 units. So this gives us 20,000. Then for Z, the same is 1.4 and 1.4 you multiply by 22,000 units and this will give you 30,800 right over here, and totaling them up, 30,800 plus 20,000 plus 30,000 gives you 80,800. Right. Now I'm going to take these two costs, add them up, 420,000 plus 361,400 and multiply this by 30,000, which is the number of hours per X, and divide that by 80,800, which is the total number of hours. So this gives me 290,123.762. Now I'm going to add the three of these, 105,333.33 plus 97,391.30, and this gives me the total as 492,848.30. 4. Now I'm going to divide this by the total number of units for product X, which is 20,000, and this will give me my answer as 24.64, which is option B. This I have divided by the number of units, which was 20,000, this value, right? And this gives me my answer as B. Moving on to the third question. Using activity-based costing, the total overheads allocated to product Z amounted to these many. What is the budgeted full cost production per unit using activity-based costing for product Z? Now, first we need to find out the overheads for one unit. So this is given for the entire product Z. For product Z, we have made 22,000 units. So I'm going to divide this by 22,000. This will be 576,583 divided by 22,000, and this gives me 26.21 roughly. And then I'm going to take the material and labor from above. Material for which product are we calculating? Product Z. So it is 28 and 24. So this comes out to be 28 plus 24 plus 26.21. If I add these figures up, I will get my answer as 78.21, which is B. Now moving to the fourth question. Which of the following statements about activity-based costing in Duff Company are correct? ABC can be applied to all overhead costs, not just production overheads. Yes, this is true because for every overhead cost, the driver can be found out and ABC can be applied to the same. ABC provides a more accurate cost per unit of X, Y, or Z, and as a result, pricing should be improved. That is also true. We can, compare and contrast from right here. We calculated for product Z, we got our answer as 71.4 using absorption, and using this we got 78.21. 78.21 compared with the cost that we were getting above 71.4, it is actually a better pricing because we know how much exactly was the resources or was the money spent on product Z, and this is actually a more accurate cost which can even help us to improve on the pricing, right? ABC recognizes that overhead costs are not at all related to production and sales volume of X, Y, and Z. That is true because it, allocates the overhead costs on the basis of what is driving those costs. It is not concerned with the production and sales volume. It is the traditional method of absorption costing, the traditional absorption method, which is concerned with the sales volume. ABC will be of limited benefit in Duff Company's overheads if the overheads are primarily volume related or if the overhead represents only a small proportion of the overall cost. Now, the important thing over here is to understand that if the overhead costs are mainly volume related, there will be not a lot of benefit because the traditional method also allocates them on the basis of volume. So if we have to use the basis of volume only because they are driven by volume, there will be not much benefit that will come out by using ABC. And again, if the overheads are very small, then it is not very beneficial to use ABC because ABC is costly in implementing because you have to find out how much is what cost and what is the driver for that cost. So yes, this point is also correct, and that makes my answer as D. All the statements over here are correct. Moving on to the last question. Using ABC costing, the production cost of product X is very similar to the cost calculated using traditional absorption costing. But for the cost of product Y is almost $10 less. The demand for products X and Y is relatively elastic. Now, when we have an elastic demand, we mean that the demand is very price sensitive. Like if there will be a change in price, there will be a change in the number of units that we are selling, right? So, which statements are true? If the company decides to adopt, if the company decides to adopt ABC, the price of product X will change. So it is seeing that the question is already telling us that the using ABC, the production cost is very similar with the traditional absorption costing. So the price will not change. This statement is wrong. If the company decides to adopt ABC, sales volume of X are likely to remain unchanged. Now this is true because if the price of the product will not change, the demand will also remain the same. So it is unlikely to change. Right. If the company decides to adopt ABC, the price of product Y will go down. Now see over here that it is written that the cost of product Y is almost $10 less when we use the ABC method. So when we find out that the actual cost that we are incurring in producing the product Y and the demand is elastic, so what we'll do is we'll try to reduce the price so that once we reduce the price, more and more customers will be buying it. So yes, the product of price Y will go down for the price of product Y will go down because the cost is almost $10 less. So the statement is also correct. If a reduced selling price is unlikely to give rise to increased sales volume, this is wrong because it is written that the demand is relatively elastic, and elastic demand means that if there will be a change in price, there will be a change in the quantity demanded and sold. So my answer becomes 2 and 3, which is B. Here we have come to an end of this question. I hope you found this useful. You can put any doubts that you may have in the comments down below, and you can also let us know which question do you want me to solve next. Thank you. I hope you found this useful.